Hey everyone, Chris Engelbert here with Engelbert Financial Advisors in beautiful Allentown, Pennsylvania for our weekly update talking about the markets. Again, I'd like to thank Rotella Capital for providing me with this platform. Really appreciate it, guys. And so what I'm going to talk about today is something that's on every investor's mind right now when you're looking at the equity markets, and that's large cap growth returns versus large cap value. This has been a trade that's been ongoing for the last several years now. And just to give you some real stunning statistics so far for 2020, that as of yesterday, if you look at the Russell 1000 growth, and then you look at the Russell 1000 value, right now, year to date, we have the Russell 1000 growth index literally up 12.69%, while the Russell 1000 value index is down 17.5%. That's a spread or difference in return of over 30% of large cap growth to large cap value. So one of the other factors this year is the triple Qs, or the NASDAQ 100 is up over 20% this year. And those stocks that the acronym is FANG have been leading the charge. Now, my thoughts on this particular trade, and I'm going to make a bold statement here that I'm calling that this could possibly be the final turn of large cap growth over large cap value. And what I mean by that was that last August, we saw large cap value stocks outperform for about a month. There was a lot of conversation saying, hey, has growth stocks finally run its course? Is that trade finally over? And then in the fourth quarter, we saw an acceleration of large cap growth taking the lead again. And so far this year, we've seen the same thing happen because of obviously the COVID situation where everybody's like, hey, you're going to see a lot of large cap growth stocks really do well because of the work from home trade. And we've seen an acceleration on the upside there. Now, briefly, the first week in June, we did see large cap value outperform, and it outperformed in a very vicious manner over large cap growth, only to collapse once again. Now, I get the question all the time, what are the sectors that are driving? We all know in large cap growth, it's technology. But in large cap value, the two dominant sectors happen to be energy and happen to be the banking sector, both of which the first week in June really took off only to collapse back down again. Well, we think that this is a situation where investors are going to be looking for value, no pun intended, in the large cap value space because you're getting dividend yields north of 5%. And so something I've been saying for quite a while now is that with fixed income rates extremely low, the 10-year treasury is currently trading at about 65 basis points. If you take $10,000 and put it in a 10-year treasury, obviously for 10 years, you're going to make $65 a year. If you look at the value stock sector and you do a portfolio of value stocks, you're going to get a dividend yield of over 5%, almost 6%. That's 10 times the yield on the 10-year treasury. So we think that there's a lot of, again, no pun intended, value in the value stock sector. We've seen a couple of fits and starts, obviously last August, the first week in June in 2020, and now we're seeing extreme valuations as many of the FANG stocks run unabated to new highs. We think this is a chance for investors to take some profits and look for what's cheap. One of the old adages has been to obviously buy what's cheap and sell what's expensive. And in the value versus growth trade, that obviously hasn't worked the last 3 years. We're making a call. We think that there's going to be a change now where at the worst case, growth actually does nothing for the rest of the year, while value stocks provide obviously a lot of value. So that's my thoughts for this week. Take a look at the trade. It's very easy to monitor. You can use the ETF BONG to look at the Russell 1000 large cap growth index. You can use the ETF BONV to look at the Russell 1000 value index. You can plot them against each other and see when the value trade is coming back on again. But again, the energy sector and the banking sector are extremely undervalued at this point in time. So that's all for this week. Thank you very much, and we'll hope to talk to you next week.